And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets. So let's take a look at what we're going to be covering today. As usual, we'll drill down, take a close look at the current markets. The S&P was up over 2% this week, but we'll dig in there. And then also earnings season. It did get a little more into gear this week. So I'm going to share with you what we have seen so far as it relates to investors' response to those earnings. This is something you're going to want to tune in as we really get into earnings next week. I'll get into that as well. Also, stocks breaking out of bases, of course, one of my favorite formations. I'm going to share with you at least a handful of stocks that have broken out this week and a couple that are setting up for next week. And then also down and out stocks beginning to turn. This is a segment I've been covering over the last few weeks, and there is among other reasons, these down and out stocks that are turning have really had outperformance as far as their gains. I'll share with you some of the stocks that we've gone over the last couple of weeks to share with you that, as well as current stocks that are just beginning to potentially reverse their downtrends. Also, alternative energy, it's been a very strong area, certainly last year into this year, but with Biden's election announcement of his plans going forward, there's been a resurgence in some of those names. I'm going to share with you some stocks that, as I've said, they did already have nice moves, but they're setting up for another leg up. So with that, let's get started. I do like to share with you some of the news items that occurred last week as far as economically and otherwise, and also some reports due out next week. It was pretty quiet this week on the economic data front, but all of this is designed to help you formulate your plans going forward, but also give you that backdrop as far as what we did see last week and how impactful that may or may not have been. So, of course, we did have our new president sworn in, the 46th president. There was a bit of kind of a normalcy, if you will, that came back into the market without the chaotic period that we did experience into the end of last year. So that was certainly noticeable. We also did get a number of home building and housing data last week, and all of it very, very bullish. December, we did see a jump. Of course, the historically low mortgage rates are continuing to pump sales into that area. Weekly jobless claims, they came out yesterday. They did drop, but still the jobless claims are at an elevated level. Of course, COVID cases, unfortunately, also at elevated levels. So we are seeing an impact there, and there is an impact elsewhere that I'll get into. Factory orders jumped to their highest level in 13 years. So the manufacturing sector is alive and well. But just getting back to that jobless, there are supply chain issues, primarily driven because of lack of employees, and then other areas as well. So next week, things pick up on the economic front. Consumer confidence, durable goods, we'll get a look at that GDP number, and then personal income and consumer spending. All of that is going to take place in addition to a super big earnings week. So let's go ahead and get started. Take a look here at the daily chart of the S&P 500. I do like to key in on these shorter term simple moving averages. And earlier this week, we did get a dip below this green 10-day simple moving average. The markets were able to recover. That Wednesday period was quite healthy. And then the RSI and stochastics, your outside momentum indicators, are trending upward. So the uptrend within the broader markets very much in place. So let's drill down beyond the broader markets, because this week we did see the S&P up quite a bit. There was one main reason for that, but we also saw a little waffling and not really, can I call it rotation just yet. 1 week does not a rotation mean, but we did see a little bit of a reversion, if you will. So let's take a look. These are the 11 sectors within the S&P 500. Gone ahead, added that RSI, sorted it descending. So up here in the upper left quartile, you're seeing the currently stronger groupings. And this really is not going to shift dramatically. It's not meant to show you very quickly what happened last week. Rather, you'll see these stronger groups linger at the forefront, and then if they are deteriorating, it will be a slow event, which is actually what you want, because these markets are true to form going to ebb and flow as far as industry group strength or weakness. So we're looking at a 2-month daily price chart. We can see that the consumer discretionary stocks up here in the forefront. We did get retail sales numbers last week that were not very promising, but there are very vibrant areas within discretionary, and a lot of it is those higher ticket items, automobiles, housing, an area that really grew in the beginning stages of the pandemic and are resurging again. So healthcare, all of this is biotech. I will tell you, we're going to look into some of the subgroupings within these areas, but let's take a look. Communication services and technology. Take a look. They've had a difficult period into this new year. Of course, a lot of this is those internet-related, Twitter, those that closed and banned Trump, but there were other weakness areas here as well. And then tech kind of lumbered here and did pull back in the beginning of the year. So from my work, I am pleased to see both tech and communication services really outperforming the broader markets. Some other lagging areas attempting to come to the forefront, but not quite there yet. And we did see those cyclical areas, those recovery areas, energy, financials, materials, and industrials down here in the lower quartile. So this is that shift that I mentioned. And really what I want to highlight here, because again, this area, communication services, tech pulled back. When this is from my work, the real reason that as an investor, it's important that you stay diversified. There are those that would argue, put all your eggs technology strong, stay in there. Not so. I would argue that these groups very naturally will ebb and flow. So you are well served to spread it out a little so that you can be buffered from these shifts that occur. Let's drill down even further into some of the sub-industry groupings. And from my work, I do favor higher growth. So I do have, and then faster moving. I have software ETF, also semiconductors, biotech, but I also included the banking area. This is an area that from my MEM Edge report, we did get into a number of stocks in that late October, early November that have really done well. That's KBE is that ETF. Again, RSI, and then sort it descending. And we can see up here in the forefront, again, it is retailing. XRT is the S&P 500 retail ETF. It is equal weighted. Most of the stocks in here are digital or online retailers only. So a nice advance continuation uptrend in that area. Biotech still up here at the forefront, nice 1.8% advance for the week. And then small caps, again, regaining their momentum. They did not perform as well as the NASDAQ, but did do quite well with a nice 2% advance. And then as we move down, we can see other areas. I'm just going to pull up this US oil USO because we did see a fairly sharp pullback in some of these energy stocks. And realistically, this is another area that from my MEM Edge report, we did get into a number of stocks, actually I would say a handful, back here in this early November turnaround phase. A lot of this, some of these stocks are up over 50% since that period. So a pullback, very natural, but this is the oil fund, not those specific energy stocks that I was referencing. I'm going to update this again. And we did see software come back into play, and that is very, very encouraging. So that's your drill down, your bigger picture view. Let's go ahead from here because I talked about earnings season from my work. Many of you may know my background with William O'Neill and Company for 15 years, where I worked with portfolio managers and analysts that were educating them on the O'Neill methodology, which is all about getting in front of these big growth stocks. And numerous studies have proven that the number one driver of a stock's really explosive outperforming move is going to be earnings season. So this period that we are in and we are entering now is prime time to get in front of potential big winners. So let's take a look at a couple of stocks that did report last week. Netflix, this is on my MEM Edge suggested holdings list, and the stock, take a look, it gapped up tremendously in response to their earnings. The company's been doing a lot, Netflix, in the way of cutting back costs. They have not done a lot in the way of production. That was one area that helped improve margins. But the real reason that Netflix gapped up so significantly here is due to management's guidance going forward and also about subscribership. Netflix hit a record high with new subscribership, and they are bullish going into next year. My point here is that what we have seen so far is that while current earnings can be compelling, the response that we're seeing so far in stocks that are responding positively has everything to do with management's guidance going forward. We, of course, are in a very uncertain period with the economic recovery, so that is what you will want to key in on. So Netflix, we had that nice gap up, huge volume. I've talked about this in the past. When these stocks gap up and break out of a base in doing so, but even more importantly, if it is on earnings or other very compelling news, super bullish action. So let's take a look at other companies that did report this week. See if I can share with you, because first I'm going to share with you a stock. This is, we're going to be looking at some of these transportation stocks that did come out this week, in particular, a couple of rail stocks. So here we are with CSX, and we can see they did come out with numbers, gap down below that 50-day. So this is more in line with the several of the rail stocks. UNP also gapping down upon the release of their results. But let's take a look at a rail stock that did have bullish response to the release of their earnings. This is KSU, Kansas City Southern. The reason I'm pointing this out is because KSU management did go ahead and guide higher for 21. So that's going to be your, or so far, has been your divider. Of course, we're in the very beginning stages of earnings. So let's take a look at some other companies that have already reported. Take a look at what we can see in the way of buying potentially on the pullback. JP Morgan was one of the earlier reporters. They came out with great numbers. A lot of it has to do with their investment banking division. They have the Chase credit card that also came in with very good. But again, this company guided higher for 2021. They're looking for net interest income to be increased going into next year. So we had that nice run up. But let's take a look at this pullback that is occurring very naturally. We can see JP Morgan got into an overbought position with the RSI up here above 70. So a pullback would in fact be very natural. This moving average, convergence, divergence, another momentum indicator, we can see that it can shift downward. And really, it's just telling you that the stock is due a period of a pause. And so I would look for JPM at this 21-day simple moving average to see if it can hold support. Morgan Stanley also came out with their numbers. Let's take a quick look. This is another MEM Edge report stock that has been a real winner for us coming out. We put it back on our list back here when the stock turned bullish. And more recently, they too came out with very good numbers. There is price targets as high as $90 for the stock, and it is pulling back very orderly to this 21-day. We can see that that historically can be a nice area of support after coming out of an overbought position. So that's a look at companies that have reported. Before we leave the earnings theme, if you will, I do want to share with you, because next week we have several highly relevant stocks that are due to report their earnings. Let's take a look at a couple of them, just so you'll have that on your radar. Tesla due to report on Wednesday, of course, a big explosive winner out of here, and it'll be interesting to see how they report, because historically these gaps up and advances are following strong earnings. However, the stock is very clearly overbought given its advance. We can also look Facebook due to report, Tesla on Wednesday, Facebook on Wednesday as well, Apple, another stock due out. So Wednesday, everyone's going to have to put your seatbelts on. Apple, lots of bullishness surrounding their potential numbers with their iPhone 12 sales. We can see momentum just shifting upward. So very interesting. Microsoft is going to lead the FANG pack, if you will, with their numbers on Tuesday. The other thing I did want to mention, we just looked at Facebook, Apple, and also Microsoft. We've seen a nice resurgence back into these FANG stocks. Apple up 9%, Microsoft and actually Facebook up 9% as well, Microsoft up 6%. So this is that resurgence, but we've seen it in the past. So it'll be interesting to see if earnings is going to be that driver that really helps to continue a potential advance beyond this week, where they did come back into favor. So let's go ahead. I'm going to take a very brief break here because, as mentioned, we have a lot more to cover. We're going to take a look at turnarounds, base breakouts, and then alternative energy stocks. So we will be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I'm going to go ahead and start with taking a look at the turnaround. I'm going to call this the anatomy of a turnaround. And those of you that follow my show each week, welcome back. But I also wanted to point out that I did highlight Amazon about 2 weeks ago with that turnaround, because there were a couple of factors in play, but technically, Amgen did break back above these shorter term simple moving averages. And we did get that nice confirmation here with that MACD breaking back above that net neutral. And then in addition, a nice positive RSI. The other factor here eventually, because I did cover it again last week, because we had that nice base breakout in addition to breaking above these shorter terms. So Amgen clearly on its way, breaking out of a longer term base. So these are the characteristics. Of course, near term it is overbought, but we did cover also Gilead about 2 weeks ago, and we did cover additional names last week. I talked about the need for Gilead to break up back up above this 200, and it is having a little bit of difficulty. This 200-day is now at 66.95, and the stock closed at 66.94. So we're just on that cusp. But again, those positive bullish characteristics as the stock breaks above these shorter term simple moving averages. So let's take a look at a couple of names that have not reversed their downtrends, but they are names that you'll know. So I'm going to suggest that you get them on your watch list if they're not already. This is Zoom Video, of course, a big winner out of this pandemic. Pretty extensive pullback here. This is very lengthy. The reason I'm pointing that out is because the longer your pullback period, and in this case, it's taking us back, let's see, October, so a good 3 months, your advance or your break back above into an uptrend will, on average, take a little bit longer. It's going to have a lot of work to do, but definitely worth keeping on your radar, keeping your eye on those outside momentum indicators. Look for a break back above that 50. Another name that has really suffered of late, but is looking very interesting, is Salesforce, CRM. We had this drop here, earnings driven. They did go ahead and announce a merger or potential buyout of Slack, and the markets did not like that. So this is another one that has been in a fairly lengthy downtrend. I'm going to need to see quite a bit on the way of upside before being a believer, because in essence, this stock really did peak back here in September. So that's going to be a good 5-month downtrend that it's going to need to be reversed, but definitely worth keeping on your radar screen. And then one last name we can take a look at. I like to look at these prior big winners. I want them to be in groups that are vibrant and exhibiting potential turnaround characteristics. This is Trade Desk, TTD. They are involved in digital advertising sales, and a big winner here. This drop, there really was not a lot in the way of news, but keep your eye out for a break back above those moving averages. We are getting that nice MACD signal crossover, black line up through the red, potential turnaround here, but once it does break up above zero, even more compelling. So that is, I do have one other name that I can share with you. I could probably go on endlessly here because I do have a lot of these stocks that are on my watch list for my MEM Edge report, and I do want to alert subscribers when they potentially turn. This is Overstock, OSTK. And again, a very, very lengthy period. This is that beginning of September. So we are seeing the beginnings of a potential reversal. So I'm going to leave it at that for that particular concept. What we can do from here is go ahead and take a look at some of these alternative energy. And of course, many of you may be well aware of Biden's plan, his $2 billion clean energy plan, which has a lot of people excited. But even beyond that, a lot of these alternative energy companies, they are on the move because of real reasons as far as technological advances, partnerships. PLUG has been a very big winner. This gap up here was the company's announcement with a with a Korean company to partner with them and provide their fuel cell energy. But what I wanted to point out here is over the last, I'd say about 8 days, the stock has pulled back and is base building here at this 10-day simple moving average. So what I like to do is go back periods when the stock has built a base. Ideally, you do want this RSI to come down, and also this MACD up here at such heights is not going to make the case for a really lengthy another leg up per se. So we may need a bit more in the way of time as far as a pullback for this particular stock. Let's look at a Chinese electric vehicle and parts company in and we can see this is NIO, N-I-O, another one that about 2 weeks ago hit a near-term high and is pulling back. So again, keep this on your radar screen. Even though these stocks have had these triple-digit moves, from my work again at O'Neill, oftentimes they can go on much higher. Your average advance in your biggest winning stocks is about 18 months on average. So keeping that in the back of your mind. We can take a look at FCEL. This is going to be a little more actually another stock that is potentially pulling back, finding support at this 10-day. We can go back historically to this late December period pull back, and advance. So you're going to want to use history as your guide. One last name here in this area that actually I had put on our MEM Edge list and kind of got a bit weary. It's Cummings, CMI, and I had put it on because it was an alternative energy play in the sense that they are truck uh, manufacturers, and they are also involved in Europe. They're providing alternative energy vehicles such as buses. So they are big in the area, but it's interesting to me that this week it did hit a lot of radars as far as being a potential alternative energy candidate. So we're a little bit earlier in that potential play as far as the space breakout, and it is a 2%, 2.2% yielder. Let's take a look. I have a few minutes left. I want to share stocks that have broken out of bases or are poised. First up, we're going to take a look at Chinese online auto sales company. It's called Auto Home. A little bit dicey as far as the chart because we can see it's been very volatile as far as, well, that's not going to work, but I was going to kind of draw that base and highlight the fact that the stock did break out of a base this week. Not great volume, but certainly and something to think about. We are seeing home builders. I talked in the beginning about the just tremendous surge in home building starts. And this is a stock MHO that really had this big breakout on Wednesday out of this very, very lengthy flat base, this period of consolidation. And we can see that, let's go ahead and I'll just see if that's on your weekly. So you can see really it has had a 20% move. So we'll keep that in mind, but it is certainly huge volume. So another home builder that we can take a quick look at is a bit of a smaller name, a 1.6 billion company. They're primarily in Texas, Nevada, a lot of these areas that people are potentially moving to escape high taxes where they currently reside. So here we can see this nice base breakout here. Nice volume characteristics. Your MACD has turned positive, so that would be one certainly for your radar. And let's take a look at a couple of other names because we did have a fair number this week of base breakouts. This is Cars, C-A-R-S, smaller company, but another online automobile retailer. Again, nice momentum indicators on the outside here with the black line up through the red. One other name that we can take a look at is a software security stock, SailPoint Technologies, S-A-I-L. Now I'm looking at it, it's not quite as dynamic. One other name that we can look at in technology that got a nice upgrade this week is Synopsys, SNPS. This company is another software company, but they are involved in semiconductors and also more importantly in 5G, artificial intelligence, autos as well. So we can see that the stock did have this nice base breakout earlier in the week, and we did get some nice volume. So keep that on your radar. I'm going to leave it at that. For those of you not familiar, go ahead and take a look at my MEM Edge report trial. There is a link down below, and with that you will get quite a bit more as far as insights into individual stocks as well as where I'm seeing sector strength, and even more importantly those stocks that can benefit and capitalize on that sector strength. We've had a number of each week, certainly for the last 4 weeks, we've had some of the top performers in the S&P 500 on our MEM Edge suggested holdings list. So certainly you'll want to, again, be able to capitalize on this shift that we're seeing in the broader markets. So I'm going to leave it at that. Everyone have a great weekend, and I will see you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.